What's up, everyone? All right, finishing the 11th trading day of 2018, up $5,513.44. The hot streak continues. I'm up over $60,000 on the month right now, and well, it's only the 17th day of the month. So we still have pretty much 2 full weeks left of trading, and right now, I'm just thinking this might be the month that I break 6 figures. I mean, $40,000 away, but with $5,000 days, it's not going to take too many of them to get over that level. So this is my 3rd day here in Santa Barbara. I'll give you guys a little tour. You can see my kind of mobile trading setup here. It's not my favorite one that I've ever set up. Mostly just because they didn't have a proper desk in this room. They only had, this kind of like coffee table situation. So I've got my computer set up there. I've got one on the floor, and then that one there. And then the nice thing is I've got my little patio. Oh, look at that. The sun's starting to rise. It's beautiful. So let's see. Let's sit down here. So today's one of those days where, I came into the market and there really wasn't anything I was super crazy about. I can't see you guys super well, but I'm sure you'll be able to see me. So we had a couple of stocks on the gap scanners, but the scans really weren't that great. We didn't have anything that was just amazing. Neuro, N-U-R-O, was our leading gapper this morning, but the problem with it was it already had a ton of volume and it was well off the pre-market high. So it just wasn't really holding up. Just didn't look super interesting. Took a trade on it right out of the gates, lost $700. First trade, boom. And, obviously I don't like that happening, but the good news on that loss is that I kept my stop really tight. So, it was 10 cents. So 10-cent loss was 7,500 shares, which is really not bad. And then we started to see some opportunities, was able to get myself out of the hole, into the green by $450, then into the green by $1,200, then into the green by $2,000, then $2,500, $3,600, boom, $5,500. My work is done. So this has been another solid day of trading. It's been a great week. We've got a couple days left, and I'm hoping that we continue to see this momentum. The interesting thing today is that none of the crypto stocks were hot. Not surprising, because right now Bitcoin is down 50% off the highs from December, which is a really sharp pullback. So all of those companies that were coming out with blockchain news, crypto news, they're all kind of dipping down as traders start to say, well, I don't know about this. This might not be the best headline after all. So those stocks have been kind of slow the last couple days, which is not surprising. So anyways, I'll give you guys another shot of this view here. Let's see. So today I'm gonna finish up here in a few minutes, go drive around Santa Barbara, take some more pictures, get some more video, enjoy the sights, enjoy the warm weather, and then tomorrow I'm gonna head down to LA, check out a little bit of a different area. The funny thing about this hotel, it's nice, like it's really nice, but it's also kind of a little too nice. It's like a little fancy, and I was literally waiting for my car at the valet the other day, and this woman, she's holding a terrarium with a turtle in it, and I'm thinking, who brings their turtle on vacation with them? This is crazy. But she had her turtle with her, and I guess it was her and her husband. The bellman is like, or the valet guy, he's like, "Ma'am, would you like the turtle to ride with you in the Maserati or in the Range Rover?" I'm just like, this is insane. The turtle chose the Range Rover, and I think it was a great choice. It's a much more comfortable ride. He's got a hard shell he's bouncing against, so It was a good choice, but I'm gonna be happy to switch hotels and head south tomorrow. So I'm gonna do my trading in the morning and then head south to LA. It's gonna be a long drive because the 101 is closed because of these mudslides. So I gotta go all the way around instead of a 2-hour drive. It's gonna be like 4.5, 5 hours, but gonna make it happen, get down there, and then trade Friday morning from LA. All right, so before we get into today's midday market recap, let's roll that intro video. What's up, everyone? All right, time for our midday recap. Let's break down the trades from this morning. So, hanging out here, I don't know, was it today, day 6 being California, day 7? It's been a great week here. I've had a lot of fun, and trading has been awesome. So, finishing the morning up $5,513. Can't complain. I mean, that is we're just seeing some great opportunities day after day after day. So today I'm breaking over $60,000 of profit on the month, and we've only had 11 trading days. So I'm averaging $5,500 a day. You know what? These days are just going to help me boost my average for 2018. Last year I averaged, I can't remember now, it was $1,500 a day, I want to say. I think it was around $1,500 a day, something like that. 1,500 times 235 trading days. Yeah, around 1,500 a day. And you know what? That was great. $1,600 is a great average. 350 grand is not bad at all. If I actually averaged $5,000 a day for the whole year, I'd make over $1 million. And I don't have that. I'm not setting the bar that high. I think that would be unrealistic, and that would be setting myself up for disappointment. So I just want to do better than I did last year, and keep always trying to be a better trader. So this is a great start to the year so far. I'm getting really close to breaking over $100,000 in my trading account. This account started at the beginning of the year with like $33,000. So once again, proving it doesn't take a lot of money to be a profitable trader. So as of right now, I'm at $392,000 in my account that I started a year ago with $583. $583 to almost 400 grand. I'm excited for meeting the halfway point of 500,000. So I'm $108,000 off that level, and maybe get to the halfway point in March or something like that. But that's the line in the sand, because once you get to the other side, it's like hump day, Wednesday. You get to the other side of the week and it's smooth sailing, it's downhill. So I'm just excited to get to the other side there. At the beginning of this challenge, even on the day when I broke over $100,000, I was like, okay, that was great. I took $583 and turned it into 100 grand in 44 days, but I'm still only 10% of the way there. I've got to do it 10 more times before I get to $1 million. And that was definitely, a little scary to have the, know that I was that far from the goal. But, slow and steady wins the race. I'm a year later, and 392,000, not bad. So let's look at the trades from this morning. Today's a day where I really didn't have anything that I was crazy about. So let's look at the gap scanner. Let's see, where's my mouse? There it is. All right, so gap scanners this morning. I'm going to go right click, time frame, historical date, and we're going to look at this gap scanner at 9:15 a.m., whatever, 9:12 a.m., that's fine. All right, so 9:12 a.m., this is what the gap scanner looked like. We had, oh, it's got to update, I guess it's slow to update here for some reason.
But our leading gapper was Juno. There it is. Juno was the leading gapper, gapping up 64%. And so I was like, okay, this one certainly looks interesting. However, what's the reason that I might not have been super crazy about it? The volume, 3.37 million shares of volume. That basically told me that when the bell rings, it's not going to mean a lot because traders are already actively trading this. This is very thickly traded for pre-market. And so when I looked at the chart, so number one, I looked at the scanner and I thought, well, I don't know if I like it because the volume is so high. That's number one. Then number two, I look at the chart. I pull up the chart and I realized that it had sold off versus the pre-market highs. So that was number two. Two reasons that I was a little iffy on the trade. However, we still ended up seeing an opportunity on it. So right out of the gates, I thought, you know what? I'll jump in here to see if it pops over $3. The high is $2.96. So my very first trade, I got in this at $2.90 with 7,500 shares. Target was $3 and $3.05. A break of $3, planning to sell around $3.03, $3.04, $3.05, maybe sell the rest at $3.10. That would have given me about $1,000 of profit. So that was my profit potential on the first trade. It popped up to 95. It didn't hit my target, so I didn't sell. And then it dropped down and I sold at 88 and at 70, 79. And this is actually kind of a bummer because if I'd been able to sell the whole thing at 88, I only would have lost 150 bucks. But I sold most of it at 79 because it dropped fast. And so I lost $718 on my very first trade. 1 minute into the day, I'm in the red. And, for that one, I thought, okay, I'm starting in the red. It's not going to be good. And Jez, yeah, so here's the deal. When I talk about, I talk about liking high volume. I like high relative volume. I'm going to mute my scanners here. So I like high relative volume, but there's also a tipping point where we have too much volume. So that's kind of an interesting thing because it's not more volume is just better. It's sort of a bell curve where light volume stocks are hard to trade because the spreads are big and they're not really great. Increasing volume is good because that means traders are starting to see it, they're starting to buy it up, and you sort of get that feeding frenzy. Especially with small caps, traders jump to the next opportunity that's moving. So when a stock is starting to move, that's the time when volume is ramping up and the price is moving quickly that we want to jump in and try to capitalize on that first and maybe second leg of the move. But then we get a tipping point where, okay, now the volume is really peaked. We have high volume, the move has already happened, and now you may have some traders who are jumping in to try to buy the first 5-minute pullback or something like that. But you also have traders who are like, I've been watching this for a couple hours. I think it's going to drop. I have a big account. I'm going to short it. And so it starts to bring in short sellers plus more people taking profit. And then that's when it becomes more difficult to trade. And that's the backside. So Neuro, you see the front side, which is this first move up, and then it pulled back. And this had the opportunity of continuing higher. But when it broke down right here on this red candle at 835, that to me sort of signifies that it's turning to the backside of the move. Now, I will sometimes try to trade the backside of the move because I think that it could pop back up and continue, but it's riskier. And on this one, I ended up being wrong and I lost. Now, I'll say my accuracy so far this year is 80%. So 8 out of every 10 trades I take, I'm right on. I'm making money on. So my accuracy has been pretty good. And even on this one, to lose 700 bucks is not a big deal for me. Within my risk tolerance, like this is not really a concern. It was just a trade I took and it didn't work, so I stopped out. And if you had taken it with 2,000 shares, you would have lost 200 bucks. If you took smaller size, the loss would have been smaller. For me, it's a $700 loss because I took 7,500 shares. It's related to my position size. Okay, so that's a little explanation on Neuro and on the volume, kind of that balancing act between high volume but not too high. And it's not just the volume, it's also the chart. Because when you have higher volume, you're more likely to see this type of chart action where it's a little bit choppy. Okay, so Neuro was kind of on the list. I took a trade on it and lost on it. AEZS was also on the list as like a, maybe. You can see 320,000 shares of volume. It wasn't as crowded, but the chart didn't look very nice because it had popped up and then it really was just selling off. So by the time the bell rang, it just wasn't looking super pretty. So that was no good. And then And that was it. Juno is too expensive. NUA, NEWA, too expensive. And these ones I wasn't interested in. So they were either too cheap or just didn't look good on the charts. So the bell was about to ring. I only had 2 stocks I was watching. Neuro, AEZS. Took a trade on Neuro, lost $700. And so I was like, all right, well, let's watch the high day Momo scanners. Let's see what starts to pop up, what starts to look good. And the first one that popped up was ONTX. One of the things that I look for when a stock hits that scanner is I want to see that the stock is moving quickly. This stock was definitely moving quickly because it had already squeezed from $2 up to around 220. Let's see, let me zoom this back in. So you can see my order there, buying 7,500 shares at 227 and 230. Let's see right here. So I bought 227 and 230. It pops up and it taps a high of 60. What was the high? 67 or 60, right around there. But unfortunately, it did not hold that level at all, and it came back down, which was disappointing. So, I sold into that squeeze going up. So 7,500 shares from 28, selling at 48 is $1,500. Selling at 52 is like 16, $1,700. So, 17, $1,800 on that trade. And then I got back in at 240. So I got back in when it consolidated, it pulled back, and then it started to ramp back up. And so I got in right here. Target was a retest of high of day. We couldn't retest high of day. And so I ended up stopping out, but I made on that one another $750 from 240 to 252 and 254 and 252. So total profit $2,171.25. ONTX. Easy trades, not a lot of risk, just getting in, getting my profit, and getting back out. All right, so next trade, ORPN. ORPN was a little bit suspect to me. And this is one of the things. The way I trade, I look for stocks that are hitting my high day scanners. What other people will do is they'll look for stocks that they think could move really fast because they have a low float, they're thinly traded, and they'll just buy them. And so you guys have probably followed like email newsletters and stuff like that, where they kind of just pick those stocks and then they alert them, and boom, the stock just goes up. And for me, I don't do that because I don't feel comfortable doing that. Instead, I look for stocks that have already started to move, and then once they've started to move, then I'll just jump on the momentum. I don't like to be the one that is like starting momentum. I just don't feel like that's the right thing to do. But that's what happened here. Someone just bought the stock and alerted it to their newsletter, and it pops up from 329 up, or from 270 up to 329, and it's halted on a circuit breaker. Okay, so at that point, it's now hitting my scanners, and now I'm seeing it. So I'm like, okay, this stock is starting to move. I can jump on it. Well, by the time it hit my scanners, I tried to get in, but I couldn't get filled. It just moved too fast. So no fill on that. I don't think I even tried. It was halted right away. It resumed higher. And so what I do on these ones is I wait for the resumption. Let me just pull this back. I wait for the resumption, and when it resumes, I let it pop up. And so this popped up here. It's going to be a little bit hard to see. It opened, the open price was 365. It popped up to 380, and then it dropped down. And then when it curled back up, that's when I got in at 389. And I only took 2,500 shares on it because I was a little iffy. Although in hindsight, I suppose I could have been more aggressive. But the volume was light, and I also wasn't sure because sometimes when you see stocks, suddenly pop up like that, as soon as it resumes from the halt, whoever alerted it down at 270 or whatever it was is going to be selling. That's not always the case, but it can be the case. If the stock was popping up because of news, an actual catalyst, that's different, because then people are just going to keep buying. But when it's a pop from a newsletter alert or chat room or whatever it might be, you have to be a little bit more careful initially. So I got in at 389, 2,500 shares. I sell half when I'm up 30 cents at 420. It's then halted at 423. I tried to add at 423. I don't get filled. It then pops up and after the halt, and I sell it for 56. Take some profit. It squeezes up a little bit more. It taps a high of 523. It pulls back. I buy this little pullback at 519 and 523 and 550 and sell at 556, 553, and 545, and the rest at 550. So that was on actually a 5-minute setup. Let me just pull this back here. So, and here's the thing, like if you were a trader who for some reason, had a strong bias on this, you're like, well, this stock is really, I think it's really strong. A lot of people will scan daily charts. They scan daily charts the same way we look for intraday charts. They're looking for bull flags. They're looking for stocks that if they break out, they could squeeze. And someone bought this, thought it could break out, could squeeze, and they were totally right. I mean, it obviously did. For me, I'm not good at doing that, so I just wait for stocks to start to move, and then I jump on that momentum as soon as I see it hit my scanners. And I think that's a little bit easier for beginner traders as well, just to focus on scanner alerts, because when you're trying to do swing trading, it can be a little bit hard to pick which stocks are worth trading. So anyways, this has a high of 525 on the 5-minute, does a little 5-minute pullback, pops up to a high of 599. It can't get over 6, and it fades off that level. So a decent couple of trades on that for $3,104.88. And then the last trade of the day was MYOS. So MYOS was on our scanners this morning. It hit the momentum scanners. And when it hit, it was at like 185 by 190. And I was kind of watching it. I was like, okay, this looks interesting. I'm not sure. It starts to squeeze up a little more, 195, 197, 198. And at 198, I saw a 10,000 share seller. And so I thought, okay, well, when that seller moves, maybe I'll get in. So that seller started to get bought up. Other people were coming in and buying his shares. It went from 10,000, 9,000, 8,000, 7,000, 6,000, 5,000, and boom, boom. That's when I jump in at 198. However, when I got in at 198, I immediately realized that there was a hidden seller because I bought 7,500 shares and I didn't see it on the level 2. Like I didn't see the share size get smaller. So that made me a little nervous. And then when it popped up to 214 as it broke over the whole dollar, I sold half, I sold a quarter more, and then it was halted on a circuit breaker. It ended up squeezing to a high of 233, but I didn't sell up there. I just ended up stopping out at 198 when it came back down. So $955 on that. And with that, I wrapped it up, called it a day at 10:30, first hour, 1 hour in, and finished with $5,513 of profit. So, not a bad day at all. It's, what is it, 9:25 here in California, 9 a.m., 9:25 a.m., and it's time for me to go enjoy the warm weather, drive around a little bit, explore. I mean, I've got the whole day ahead of me. It's awesome. It's nice getting up at 5:30, trading early in the morning, and then having the whole rest of the day. The only thing is you're tired at night and you can't stay out late, but as long as you don't mind going to bed early, a little early, it's a good time. So anyways, that's it for me today. I'll be back at it first thing tomorrow morning, bright and early, pre-market analysis around 9:15. We'll trade at 9:30. I'll trade the first hour, and then I'm going to get out of here, drive down to LA. All right, so that's the game plan for tomorrow, and I'll see you guys right back here in the chat room. Anyone on YouTube, Facebook, you've got questions, comments, leave them below. Give us a thumbs up if you like the video, and I'll see all you guys bright and early tomorrow. All right, that's it for me. See you in the morning.
If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.